Good morning, everybody. Sorry, I was a couple minutes late there. I couldn't get my camera to work for some reason. Um, it is Tuesday, February 8th, 6th rather, 2018. And we had a heck of an interesting day yesterday, didn't we? Man, there was some big sell-offs. Although, we've been talking about that a lot, bringing up that a lot of these confluent zones of these Gann time cycles really show, and then in addition to that moon phase, that really showed us a strong indication that all long-term trending markets were going to have some type of violent reversal, and that is exactly what we had go for us. If we look at what happened yesterday in the equities, this is the Dow, all right? The Dow has broken multiple long-term trend lines. I didn't realize that it halted right on this trend line, but it has broken through 1, 2 trend lines. The NASDAQ has fallen through a lot. It's actually wants to go down a little bit more, and ES futures are down as well. So all the futures are down. This is a crazy one right here. The S&P was down over 5% at one point. I mean, it just dropped. So that was just a wild kind of a day. It was a good trading day. Now let's go over our trades from yesterday, and where we got here. So let's look at gold. So our gold trade yesterday, we wanted to go long only at a break and a hold above 1344. We really didn't get that. Well, we kind of did, but I mean, it never really broke or held above it on our hourly. It just kind of touched it a little bit, which is kind of unfortunate. We thought maybe we could get a little higher there, but we did have a short on there. We wanted to short only at a break of 1334. Again, for those of you who are new and watching this on the portal, if you're looking at it, this is just the coolest thing ever. But if you want to know where the signals are, they're right here. Just click on signals, and it'll bring up this window, and it'll show the signals from yesterday that we have, or actually for the last little while. Okay, past live sessions are in there. Educational libraries in there. I have to update that more. So just keep your eye on that if you're looking for what trades I'm referencing. So our gold trade, and then we wanted to short only at a break of 1334.28. We did not really get that either. So we're kind of floating around in our gold trade there. Now the euro, this turned out to be an excellent trade. This is still an excellent trade. We've had great shorts on this yesterday, on Friday, and yesterday, and so we wanted to short at a break and hold of 24.17, which we did get. That's right there. We did get a break of this, and it just kind of trended down. Yesterday morning, we did have some follow through selling. It found support at this support level, was bought back up, and we flushed right back down. So again, the euro is one of those long-term trending uptrend currencies. Now, if we look at it on a daily, we can see that we finally have some reversal happening here. We're broken on a lot of these longer-term trend lines here, which is very good. We've been rejected at these higher levels, rejected at this angle. I mean, we've just got really fantastic shorting opportunity, and we're in place for a nice retracement. So keeping a hold of that, I believe, is very healthy, and we should continue to hold that short. because we are we went short at 2417. That would be where we're at right now. 81 pips. And a lot more of us were short on Friday. A break of 124.6. Well, some of us are holding shorts above there still, so we're 130 pips into profit there. But if you missed it Friday, we had a re-entry, which is good. We'll probably get another re-entry today, more than likely. So let's just watch to see what happens. Okay, the other trade, New Zealand dollar. We wanted a break and hold of the of 7.333, which we did get, and it is still trending down. And we have found support on this angle. Now, that's neat how that works. Remember, the rule of angles is that when an angle breaks, price will move to test the next one. Tested it, was rejected, found support, came up, tested, kind of traded above a little bit, but came down. And so we're in a tight little trade here. So we're going to have a couple entries based on the location of where the New Zealand dollar's at. Except, to me, again, if we're looking at this on the daily, that's pretty bearish. And even if we're looking at this on the weekly, it's even more bearish right here. So we're looking like we should have a nice good old flush in a lot of these. The Aussie dollar continued to show significant weakness. We wanted to go short at 798 at 0.798. That's if it retraced up there. And I think that's why I had that there. Or break below 79.36, which we did get. I probably meant 78.36, right? No, that was right. No, yeah, that worked out. Yep. Okay, never mind. I'll keep my mouth shut. Yep, we have nice continued solid. Again, the Aussie is the one that's been correcting the most. If we're looking at our weekly chart here. And again, if you remember last week, I was talking about about the angles and the steepness of these angles in the Aussie dollar, that the next angle is really all the way down here. I mean, it's 200 pips away or so, 210 pips away. It's a ways down there. So really on any of these kind of pullbacks, we should be looking to get those short. And then let's see, the dollar yen. That was really one of our only tricky ones, but again, we have a really good strong bias for going long on here. Looking at it from a different type of chart. Oh, you know what? I didn't do it. Okay, God. Sorry, never mind what I just said, because I was looking at, I was wondering when I was looking at Fridays for the last two coins. Okay, so New Zealand dollar, we wanted to go long on a bounce of 72.88, or we wanted to go short at a break and hold of 72.40, which we have not gotten, and so we're still looking to. We're still looking to hopefully let that happen there. We wanted to go long in the dollar yen at 109.91, and I think we might have been. Yeah, we did a full retracement. That trade did not work out yesterday, but still a long bias. We're within this trading square, but we'd really like to get back above here, and we've got like a triple or quad bottom down here. The dollar is catching a bit of a bid. So hold off on that for now. The pound dollar, This has been a fantastic short as well. We had a break of this angle, continuing to capitulate. We went short yesterday at 140.22, and that ended up being a very nice trade, a very good drop here, and that's continuing. Those are good shorts to continue to hold. So we're gonna have to add to some positions here, and then the euro pound, and the euro's showing a lot more strength, huh? So we've gotten back up above here. We had a short on it going lower down here if it were to break these angles at, I think, 88. Oh, what did I say? Short at 88.57. 0.8857. Yeah, we wanted to go short here. That did not work out. Actually, this just consolidated. I see that now. Stop at 88.77. So we got stopped out of that one. That's right. Or break and hold of 88.48, which we did not get. So we're at these levels here in our euro pound, but let's look real quick at our cryptocurrencies. And then we'll kind of go down the analysis for the day. Yeah. So Bitcoin is catching a little bit of a breather. It has gone down a whole bunch lately. Yesterday it was down, a lot. It's just been down quite a bit over the last 45 days, 46 days. But we know that we are in an area for reversal time-wise. We'll come back to cryptos. Let's swing back over to our Forex market. Okay, let's take a peek at the euro. And let's go ahead and take a look at this on our weekly time frame. On the weekly chart, we have, get rid of these. On the weekly chart, we have a really good bearish setup right now. We have a rounded top. Even if we just look at the price action of this, we are forming a pretty nice candlestick on the weekly. That's fairly healthy. We have broken the low of last week. That's very good to see. Kind of had a support line here between these prices. Actually, this entire level has been broken right now. We're at 123.29. There was an attempt to trade back up and retrace this, but it failed. And so we are looking at a real fallout here in the euro. So, you're short from yesterday. We should continue to hold, but for right now, I'm not. Right as I'm talking to you, I don't think this is a healthy place to enter a trade. We want to wait for a pullback, and let's just say we'll want to do a pullback at 123.55. Okay. Otherwise, we kind of want to hang out and chill here because we are in this we're definitely gonna break this resistance zone. It's not gonna last for very long. And let's see. The dollar is coming back up very nicely. Again, even looking at this on the weekly, we have a inverse head and shoulders forming. If you remember, we pointed that out. Last week, inverse head and shoulders idea on the yen, dollar yen. And, we're having some great opportunities here to keep going up because we have been down for so long and the dollar has been weak for so long. And bond yields are going up. And there's just a lot of cool stuff for us to be looking long the dollar right now. We're coiling back up. Again, I'm going to keep the same trade. Well, let's say we should really get past 110 this week. Probably test the 110.8 zone. New Zealand dollar. Going to ping pong around here a little bit. So we'll have a couple options in New Zealand dollar. I don't anticipate it having a lot of bullish momentum. So we should look at some further down movement. And the moves are going to be sharper, and the slope is going to be more, down. The price action is going to be very much looking like this kind of a move, as opposed to this kind of move that we would see. So we have a couple really nice options here for us as far as wanting to go long or not. If this does end up being like an inverse head and shoulders pattern, going long around 73. What did I say that was? 73.37. And for a short, well, we're really looking for a break of this angle. So, that'll break this low, give momentum to break that low. So we're looking at 72.65. All right. Okay. Aussie dollar. Still a lot of weakness. This guy's been a great mover. Lots of rejection here. Lots of open space below us to get there. Oh yeah, we've found rejection in this arc. So, our next support area is going to be the 78.12. So, really, we could look at going short on a retest of yeah, 78.9. That's not too hard a one. Because we are in such bearish conditions, a lot of these pullbacks we're going to want to get a little short on. This guy, we're probably not going to touch today, the pound dollar. If you're short on it already, great. Keep holding that short. I exited mine a little too early. But if you're still holding long or short, if you're still short on the pound dollar, that's a great call. Now the pound, or the euro pound, we should be looking at a little. Oh, that banked right off there, didn't it? So we have a lot of open space above us, and we're looking for the mid here. So we may be looking at a good short at 89. Oh, we got a couple options here. It broke this angle, so that's our supportive angle. So we have a couple options here. Long at a pullback to the 1 or 0.8867. And we'll want to short somewhere before the mid here at like 89.26. All right, those are good areas to be looking at. Going short here, long on a pullback to this zone. Good areas. Let's see here. Okay, we've got. Let's do like a quick rundown here, and then at our, the cryptocurrency markets. Let's, we have to be very aware that there is strong, like cryptocurrencies, if they're not going to be eliminated or made legal, there's going to be over $1 trillion worth of market cap valuation. So the trade on cryptocurrencies is to go long. And until we get back into a trading range, anything priced where it's at right now is for me, that's fantastic buying area. I've been adding to my positions every $500 decrease. And I mean, I've been very thankful for the gift that we've been given on these cryptocurrencies. So yeah, I mean, this is really kind of nice to see this. There's huge volume participation. I mean, we've just got a lot of good things going and showing right now, which is really nice. But let's focus on our Forex trades, because those are definitely going to be the ones that we're going to be focusing on right now. The crypto market is very oversold. It's kind of a buyer's market right now. But let's take a peek at what we've got going down here. Let's say we've got Red Book and then Jolt's job openings at 9. Okay, so we've got this kind of supportive area that the euro's trading at right now. If we put on our volume, I always forget to change this over here, but so our value area is up here, and we are, if I scroll out to this swing down here at 119, where we kind of started to move up in beginning of the year, we've had really little volume participation at these price levels, like almost nothing. And where we are right now is a break of this node up here. So it's no surprise that as volume profile is sometimes a not for trading view, you have to pay for it. It's a premium add-on. I love it. I think it's one of the most effective trading tools. It tells you where volume profile tells you how much volume has been traded at a price level. Whereas the volume bar is down here. This is volume, like this is called volume price analysis, and this is volume at price analysis. So this is just the volume of a candlestick during a time period, and this is the volume of price at this level. So if we look at where these nodes are, like high value node or high volume nodes at these price levels, then this is where the professionals are trading. They're churning. So, if I'm not in a position and I want to go short, I want to go short right around here, because where price likes to go to the path of least resistance, and where is the least amount of resistance in our recent this is going back to the 9th of January. Below us is the path of least resistance. We should have an easier time coming down to 22.44 than we do going back up to 24.21. All right. Are we in a somewhat of a short-term supportive area? Sure, but the could we have a little pullback? Sure. I think retesting that 23.55 line is a good idea, but we definitely have more bias to the downside here. So just keep that in mind. Also, let's review as well what happened and why we say it happened. So let's look at the euro idea from the 1st of February. All right. Time is the catalyst for every movement in the market. It is the catalyst for all political issues. It is the catalyst for all reactions to these time-based events. Everything is a slave to time. And I copied this idea from my January 16th idea for the New Zealand dollar. I said there are rare events in the markets where you get a smashing of multiple time frames into a small area. These kind of confluent zones cause historic changes in trend and movements of markets. Sometimes those confluent zones of time affect only the instrument, and sometimes those zones affect only the sector. But sometimes the confluence of those time zones and those time cycles impact the entire financial market system. So for every hour, and that was on February 1st, every hour until February 5th is important. Every hour we get closer to February 5th, the higher the probabilities of violent and powerful moves will be happening. And then we had a series of time cycles here where we had January 31st was that moon cycle. It was that triple moon phase we've talked a lot about. The 29th was the beginning and the ending of a series of time cycles in every single market where they all ended and began at the same time. And then February 5th, where we're at now, is, well, yesterday, we're right in what's called the death zone. Gann called out these 7-day periods, series of 7 days, 7 weeks, 7 months, 7 years, 77 years, 700 years, whatever. But he called those death zones. Those are the end to blow off tops. Those end long-term trends. They cause big reversals. He called those death zones. And the longer something's been trending as it ends, when it goes from its it's a high to sorry, lost my train of thought. You begin a series of 7 cycles whenever there's an important high or low. All right, so you count like 7 hours from it, 7 days, 7 weeks, 49 weeks, 7 months, 49 months. You want to, but actually he said it goes 49 to 52 days is the death zone. All right, so that ended on the 5th, and February 4th and 5th are also very specific calendar dates that Gann said were very important. And oh my God, the VIX is at 49. Oh, God. Hold on, I gotta tell these guys. That's crazy. Where's that from yesterday? I think that's from yesterday. Never mind. So, and also, yeah, 4th and 5th, very important calendar dates. Important highs and lows are sometimes found there. And that's where we're at, because if we fast forward this idea, here's our prices at. We've since that idea was published, we've gone from 24.53 down to 23.38. All right, we've gotten a nice move there with a whole lot more down momentum. Actually, if we're gonna go for a 50% retracement between, that's a big retracement. Could be some nice pips there. Okay, now our other ideas that we've been having, like January 27th, we wanted to go short on the Aussie dollar based on the weekly. Why? Because we had 7 consecutive up weeks. 7 consecutive up weeks, 49 days. This is all a death zone. All right? 7 weeks, 49 days. This is a death zone. And what has happened since then if we fast forward it to currently? We've gone from trading at 81.07 all the way down to 78.58. And some of us have been short since that area. So, and where are we at? 78.07. It's 300. No, wait a minute. 81.06 minus wherever we are at the close here. Current, God, I can't even tell. I'll just say 78.59. 247 pips so far. That's nice. If you've been trading 10th lots, that's $247 roughly, give or take, or if you've been trading full lots, I think you can do the math. That's quite a bit. That'll pay you. Yeah, so we've had really great opportunities on these pairs, and we should continue to see weakness. We should not anticipate. Well, we could. I mean, these markets. This is still like technically in a consolidation area, so we could be just a little extended on our bottom and trade back up. But you know, the bias here is certainly for further down movement. We could expect to see a pullback of sorts, but you know, let's just watch these markets and see what happens. The dollar yen, again, bullish on the dollar because of the really accelerated low conditions we're in. New Zealand dollar, definitely looking for adding to our shorts below this angle. Aussie dollar, that looks fairly bullish. We have a double bottom here, but there's not a lot of responsive buyers. So, and if we look at it, if we were using our elite moves, we have 1, 2, 3, 4, 5. So we would look for a 1, 2, 3 retracement. That's what we'd want to see. If we could probably test that out here. See what happens when we visit tomorrow. So we have our 1, 2, 3, 4, 5. And then we're going to go for our ABC corrective wave. If we had that, 1, 2, and 3-ish. You know, roughly that kind of structure. All right, and then our short is obviously right around there, where did we, at 78, 7, 8, 9. Yeah, that's right in our range. Okay, the pound dollar, oof, man. Okay, so it's come all the way back down to our 50% retracement zone, or 50% zone in our Fibonacci area. So there could be a little apprehension to go lower here. We could definitely see we could see, I'm trying to 1, 2, 3, 3, 4, 5. That could be 1. Yeah, 1, 2, 3, 4, 5. Oh, you know, bounce back up towards 139.43. Let's. 139.43. That's what we're looking at. All right. Cool. Probably expect a little bounce there. That wouldn't be so bad. Probably get a bounce on the euro here as well, going into the morning. Yep, little bounce, no big deal. Yeah, I think we've got some pretty good trades going for us. Probably don't have to talk a whole lot today because we're just observing how these markets are going to work out. You know, if you are short from a lot of these positions that we've had since last week and since yesterday, certainly consider taking off some profit. Okay, nobody ever went broke taking profit early. I mean, that is a perfectly acceptable. That is a very healthy kind of move to do, like to take a little profit. So I'm like reading things and I'm feeling like I feel like I sound like a space cadet right now. So take some profit off. When we've had big swings like this in long-term trending markets, they're not just going to want to totally capitulate and go down right away. There's going to be some effort to try and keep the trend moving. Yesterday, we had big sell-offs, okay? It is very common to have a retracement of 50% or up to that golden ratio of 61%, 62, 63%. So be on the lookout for those, and those are great retracement areas. You know, if we're looking at what to look for in a retracement from the daily, let's look at our daily right here. Where are the retracement areas going to be in the euro? You know, we're going to be looking at, we'll take from here to here, or actually the swing to swing here. Again, I'm really not a huge, I only really like to use Fibonacci's on longer time frames, but let's look at the swing from here. Okay, where did we kind of stop trading? We found support on that 236 Fibonacci level. Okay, so we should expect it to want, if it's going to go down more, you know, we want it to, I think our short is below that low, or no, we had a short at a pullback to the 23.55 area, which is where we're coming up to, but we could also, we'd say definitely on a retest down here, this would fall 0.23222. All right, good areas, good trade opportunities. You know, if this is just a pullback in our long-term trend, you know, kind of a fake out to catch some shorts, we may have a long bias again. We may have just a slight pullback here before we want to push this extremely important level here. The 125.77 is a very significant. This is the 125.77. This blue line up here. That is the exact midpoint between the lowest level that the euro's ever traded and the highest level. So we are right up against the strongest resistance in the entire history, current price history of the euro. Okay, price is not going to just easily plow through that area. It's gonna struggle, and that could mean that we have a pretty boring year on this trade. It's possible that we have a very boring consolidative year where we're stuck in just a range, range trading is great. Range trading is fantastic. But we may end up with that kind of a scenario where we are ping-ponging around in these value areas between 121.33 and 125.77. That's entirely, or you know, lower. So just be on the lookout here. You know, trade very carefully, and yeah, I mean, we'll see what happens today. Should have a lot more fireworks. You know, these the trade yesterday was pretty wild. That was a pretty massive drop down. Now, I'll tell you this. Fox Business said that it was the largest point drop in history. That's just a news selling point. You know, 1,000-point drop on a level of 25,000 in the Dow is not the same big of a deal as a 1,000-point drop on a Dow that was valued at 5,000. Okay, it's not the same. It's just not the same. So, yeah, we've had some great trades Friday going into Monday, and on Monday coming into today on Tuesday. We still have some great trade opportunities. Let's see how they pan out. And we will visit with you tomorrow morning. Have a good one, guys. Bye-bye.